Good afternoon and welcome to Mortgage Mythbusters. And we're talking here on episode, I can see him, he's looking at us already, episode 21. And that is
episode
correct, isn't it, Baz?
You said it was 21 last week, didn't you?
I said it was 21 last
so
week, and
it's
you
one
said,
behind. Yeah.
so I'm going to put my hands up and say that I got it wrong last week, and you're going to not be able to jump in and correct me. So we're happy, episode 21.
Yeah. Happy, so, I don't know. We've just been spent the last hour setting up some new expensive mics and things with no input at all from Paddy.
And I really hope that we notice the difference for the expense.
He will not have it next to his mouth for some reason. There's some kind of weird phobia thing going on here by the looks of it. I don't know what's happening there, but yeah, hopefully sound quality's good on it. And we're back again with more special guests.
And so this is like episode 3, technically, of the new season of podcasts where we bring in specialists, banks, building societies. And last week, which was episode 20, we had Stu Bryce from Chorley Building Society in. We busted wide open the myth, which is a fantastic one, really. And I think it'll do a lot of good to a lot of people, which was you needed to have a high credit score to get a 95% mortgage.
Yeah.
And it was great because that was one that you jumped on straight away because you thought, well, that can't be busted because surely you do.
Yeah, I think I was under the impression that, just as a quick recap for everyone else, that banks they had a lot more sway money-wise, so you if anyone was going to want less of a deposit and stuff, it would be a bank, and the building societies were a lot smaller than banks and things. I'm very ill-advised on it, which was quite good. I even asked the question of what's the difference between a building society and a bank, but
which was great.
Hopefully people out there.
The way you did it there was because you understood that with the building society, you're I wouldn't say gambling, but you're using other people's money. So you'd expect them to be more careful with it.
Yeah.
Which is great because I'd say we're doing this on purpose because I'd love to take the credit, but we're not. Our guests have kind of merged, and there's been a pattern, a story to tell as we go. And that leads us on to this week's myth and to this week's guest. And I'm going to say guests because we've got 2 of them. We've got Chris and Carl from Darlington Building Society. And the myth that we're going to bust, and then we'll jump into a quick little introduction, is dealing with building societies is hard work. And that links brilliantly because we've got another building society to talk on the back of Stu's input from last week. And we'll let Darlington really get into the depths of what they can do and let some of their quirks, and we'll start by busting that myth. But firstly, welcome to the podcast, guys.
Thanks for having us.
Yeah, thank you very much.
Very well. You impressed by all this new kit?
Yeah. I think you need to give a bit more credit for the setup job.
We certainly do.
Don't work with children, animals, or Paddy.
I'm just glad there's a little bit of backup for me.
There is.
I mean, no, it's good.
In 2 weeks, we're going to have we're going to be in a podcast room, and it should be a case of walking in. I like to do this to Baz because he likes pressure. I said, "Don't worry." This morning,
I'm the least capable person under pressure.
But you always pull it off, Baz. You really do.
I would pull me out.
I'm impressed, and we'll take some photos and we'll put a bit of social media on all these boxes that Alice is surrounded in. But let's get into it. Let's delve into a bit of our local. We can call it local. Certainly is from where me and Baz grew up. But one of our local building societies, someone we work with a lot, especially through the pandemic. I'd say lifesavers in some instances. But let's delve into it. And so, guys, the myth is, and it's a common myth, that dealing with the building society is hard work. What have you got to say to that?
Who wants to go first?
I'll take it from a strategic point of view, Kyle, and you can take it from a, I suppose, day-to-day point of view. You asked the question last week about the difference between bank and building societies. Building societies are really traditional. I think there's a bit of a misnomer out there that it's like bowler hats and briefcases when you deal with building societies because the tech's maybe not there like it is with some of your high street lenders. And I suppose what we want to kind of do is obviously bust that myth, but talk a little bit about how that plays through a little bit and what the differences are.
Yeah.
So building societies traditionally take a more manual approach. They can look at things, they can understand stories, whereas algorithms like ones and zeros, yeses and nos, and our areas are the maybes, I need to explain that and everything else. So what people naturally then think is, well, that's going to be more arduous to deal with because there's going to be more paperwork, there's going to be more questions, there's going to be more emails. And the answer clearly isn't as straightforward as, well, it is or it isn't more hard to deal with. But in terms of the systems, you can configure them to handle the maybes, and you can set your risk appetites up to deal with the maybes, and you can employ brilliant underwriters who look at the maybes and ask the right questions.
So have you, in a way, got more control to be bespoke?
Yes.
In effect.
Yeah. So we would get an inquiry come through. So if we go from a journey from, let's go 5 years ago, let's go pre-pandemic, you would have had a system which I kind of akin to like doing online shopping. You put it all in the basket, somebody then goes around the shop and sees if it's on the shelves and then kind of comes back. And that's what we did. And it had a lot of manual lifting in it, and it had a lot of transposing of information over, because we want that information in order to make a decision. But what you had was, for argument's sake, let's say there's 100 touch points of risk on a case. I'm making the number up, but there's a lot. An underwriter had to look at all 100, because that's what manual underwriting is. But in 90 of those cases, or 90 of those risk points, you didn't need an actual underwriter's experience, because you could automate that decision making, as in, is there an affordability surplus? Can they afford the mortgage? Well, that's just a calculation.
So that's basics that didn't need someone's manpower time to go through.
Because of the historic systems building societies are built on, that's what they used to do. So you'd send through 3 bank statements and they would go line by line by line by line. So the myth wasn't a myth, it was a fact that they were harder to deal with, or some of them still are because they're still on that journey. But what we did is we worked with a firm called Iris, who are, personally speaking, probably the best out there in terms of mortgage originations and automation.
I'd back that up, be huge.
Yeah. Fantastic. So they have a sourcing journey from CRM all the way through to product, to criteria, and now obviously through to placing the case. And we sat down with them and we said, look, these are where we see the grit in the cogs. We have underwriters who are highly skilled, who want to lend, but so much of their time is looking at things that are largely irrelevant to the niche that they are actually there to support. So they developed the MSO platform that we now use and said, well, we'll automate those things and we'll just tell them if they need to look at something, where they need to look. So it can look at a credit report and go, it's fine, except page 7. You just need to have a quick glance at that.
Yeah.
So that gets flagged up by the system?
Yeah. So it'll do a scan on it. It can look over bank statements. So we can automate as much as we want in there. And it's a decision engine which has something like 30,000 rules in it. So it's almost like spaghetti, kind of chucked on a plate. But those weave through any scenario you put in and say, you don't need to worry about that. We've checked it as per the rules that you've agreed. Your underwriter would have looked at the same thing. We did all the calibration. That element of the case is fine. But specialist underwriter with a really niche, sharp, pointy skill set, you need to have a look at this, because this is the reason why Paddy's put that case in, and it needs the human to go, I get it, because the decision engine can't, because that would throw out and go, I'm not sure what I'm looking at here. Whereas if you look at banks, they don't have that human element in 99.9% of the cases that they look at. The system will just go, I don't get that, decline it.
Yeah, that was kind of touched on last week, wasn't it? That having that, I mean, for me personally, I'd much rather deal with someone a face. Do you know what I mean? Well, not, on the phone.
Yeah.
But you know what I mean? You'd rather think that you're getting that kind of personal.
So the high street, the banks
and
on the high street, the ones we all know, NatWest, Nationwide,
which was the outcome of
TSB.
The last podcast.
Those, when we put them in, we can almost manipulate the figures. We said this last week. Like we deal with, for example, obviously a home telephone number, and that will boost the credit customer gets that. That could be the difference. Something's going wrong if we're not making them. We do get the chat that, and we're getting more and more of this. It could be Halifax with the automated system. It could be sales volume they touch, and that's where Kyle comes in. It would be impossible. I don't talk to a system. I talk to every single case. And I think what we need to do is, and I make sure that these myths are interpreted and open up a lot of the soft facts in a bank, and it already has done conjunction with the hard facts. But this is my customer, regardless of all on a lend, having that connection with an intermediary, with the business development manager.
Yeah.
Without that, I wouldn't even know who you are. We've got to be trusted in you, because if we're putting a recommendation for Darlington Building Society and the customer has that fear of, but they're not a high street bank, I just need to know that we've got our backs covered, and that's where you guys have clearly stepped in the last few years from working with you.
Yeah, and I think the job of a BDM is probably more important than ever. And it's sometimes strange when you look at some of the big lenders now that don't offer that support for every broker, which to me seems like a bit of an oversight.
Can I just step in and ask you to clarify the role of a BDM? Because I don't think it's anything that we've really been through on here, is it? I don't think.
Good point. Go on and dumb it down for the listener and for Baz.
Yeah. So it's essentially to manage the relationship between Darlington Building Society and the mortgage advisors that deal with, 90 odd lenders, maybe more nowadays in the marketplace. And to sort of, one is to make sure that, people like Paddy know what we do, that we're there, how we can help, what kind of clients that we can help that maybe others can't. So it's from that knowledge perspective, but then also as a relationship point to, build relationships with people like Paddy so that they've got faith in us. They know that we do what we say we're going to do. If there's an issue, that we can step in, get things resolved. I think that's the main things.
Yeah,
So
I'd agree with that.
Are you an advisor yourself?
I'm not an advisor, but I'm an ex-advisor, so I'm an ex-broker, so I can kind of empathise more.
That 100% helps when you know the stress that we're going through on the back of it. And just to clear for Baz, because we didn't really introduce, we were too busy trying to set up all this tech, which is failing us. Chris was the business development manager for the last few years. Carl's come in, but we can't name names. We can't talk about specific customers, but I can clearly name 3 customers that without your intervention, we wouldn't have got there. That wasn't because you pulled off a magic wand and made it happen. What it was is that you helped interpret my understanding of the case, and we got it over the line.
Yeah.
And these are people who's gone on to do, whether it be their first home, and it normally was with these guys.
Yeah, it was.
And that's. I'm not speaking to an underwriter. I'm speaking to someone who needs to kind of listen to what I'm saying and have my back. And that's where the building society and some high street banks we still do get a good level of care.
So it's a bit of empathy from someone who's actually done the job. Obviously, it helps, doesn't it? It allows you to cut out any kind of sort of inconsistency if they know exactly what's needed.
I think there's probably 2 things in that, Baz.
Yeah.
We spoke a little bit earlier on about some of the things that we look at being niche and quirky. Mm-hmm. And that means kind of by default, it's not the everyday inquiry. So there's definitely an element in Kyle's role and some of the examples that Paddy's talking about where we'll have sat down and went, what are we trying to achieve? Because it's not what we would kind of class as a vanilla case. It's not I know nationwide, I look at this because I've seen 100 of these. It is I've heard about this type of scenario, but I'm not entirely sure what to do. And that relationship piece, it's a bit of a hand-holding going, it's all right, we have an appetite for this, we can support your client, you won't look foolish by saying, I think I can actually help you. Yeah. And that's really important. The second thing is, because some of these things are quirky, we're almost like the conduit, the filter that sits in the middle, that goes, you've got this information, this is how our underwriters are going to view it, so let's work with you on how we present that information. Because if you go back to those 100 risk elements, some of them in there might not be palatable, but if it can be framed in a way of going, that's not brilliant, but look at all this good stuff, that's totally different than going, I tell you what, I've got a bit of a shocker of a case here for you, this is awful, and there's a few nice bits.
So it's not just that, it's not the whole thing of just ticking a box, X, Y, Z, blah, blah, blah. You're actually going in and saying, right, well, this does look like it might have a bit of wiggle room if we present it in this way. And it's using, again, like I say, the human aspect.
Kind of paint a picture, aren't you? You're kind of trying to frame this client in the best possible light that you can so that when it goes to an underwriter, you're really highlighting the good points. Yes, there is maybe this odd bit, but you're really trying to highlight the good points, and that's what you're kind of selling the dream to the underwriter. And that's kind of...
It's sometimes as well, coming up with solutions that might not have been thought of in the sense of, well, can the client do this? I'm not sure, I haven't asked. Because if you do, it's a definite yes. We'll do it all day long. Yeah. And it's other things, there's certain elements of our criteria that when you talk to brokers, your calmness can be really unnerving because they think it's a huge thing and it's our bread and butter. Yeah. And you've got to, goes back to that empathy point, you've almost got to go, this is our vanilla, don't worry about it. We're fine with this type of stuff. And I know I said it before, but you won't look stupid by telling your client who's maybe gone to another broker who hasn't the relationship and put the effort in, that broker might have said, I can't help you because you're not a high street worthy, for want of a better phrase, customer. But somebody like Paddy who knows his building sites, knows his criteria, it's that confidence that if I am going to put the effort in, because there is more effort putting it in with the building site. It's not harder work, but the case needs more effort. It needs a little bit more research.
There's no more effort in my as a consumer. As a customer.
I'll just jump in there because the myth that we're busting is twofold. It's for the broker as well. Dealing with the building society is hard work. That can be the broker's perspective. And when you're saying that, I'd say 90% of them are all up to speed. When I first worked with Stu, sorry to keep bringing him up, man crushing that.
Yeah, listen, we like Stu. Yeah.
He was at Mansfield, and it was a paper application. Alice, would you prefer a paper application or an automated system on MSO?
Probably an automated.
Exactly.
I take an automated system. There's a lot less work for Alice.
So there's one example of having to. I mean, if you've seen my handwriting as well, to get a paper application, it was a hurdle. And sometimes, if there was an easier option, then it would be a no-brainer which one you'd pick. So historically, there has been, as a broker, building societies are hard work. Unless you build on that relationship and, you know what, submit that first case and deal with what you've said. And I'm going to see if you can remember this, Chris, because we spoke a long time ago and you said it and I pinch it and I use it to speak to my customers when introducing a building society. Do you remember you talked about the pillars?
Yeah,
Go on, give Baz that analogy.
So,
brilliant.
Assuming we're talking about the same thing, I've said like about the 100 kind of risk points, but ultimately we look at five real key pillars, which in amongst them will have all those different risk points. But the way it was worded to me really, really early on is, if you're building a house, it needs 4 strong walls. We look for 5 because if one of them's wobbly and the other 4 strong, the house still survives. Yeah. And that's always kind of guided me when I've worked with intermediaries in the sense of what we're looking at. Because genuinely, if it had 5 strong pillars, I'd be asking why you're ringing me, because there's something in there that you're not disclosing that we will find, because we take that human look. So let's get it out in the open. Let's get that hurdle out in the open and let's work on how we get it. But it goes back to that human element, definitely.
So adversely to, as we were saying, the human element can sometimes help someone out.
Mm-hmm.
It's covering you as well, like you're saying. It also helps you to see things that might slip through.
Yeah. So I mean, we're going slightly away from the myth, but if you look at the moment in terms of rate shock, people coming off low rates, going on to high rates and everything else, the manual assessments that we'll have done protect them better than a non-manual assessment, because we'll have stressed at a high rate to go, should their rate rapidly increase, can they afford it? And that replicates itself if you look at our arrears performance. You don't ever want to talk about arrears and repossessions. And be clear, we do not repossess. It's just one thing that we don't do. But our forbearance and arrears numbers statistically are 0, because they are that insignificant, and they're not in terms of the people, but in terms of the number, that actually we have none. And we have some, but in terms of the total lending, it's such a tiny number. And you look at that and you go, but that's because a human looked at it and made a really positive value-based decision, very similar to Dragon's Den, as in, I've got some cash here, would I lend it? Would I personally give you my money? And if you can talk to Kyle, or you can talk to Amanda, our BDM for the Midlands, or James who does the digital side, or even me, and you would lend them your money, and we can look at it and go, I think I'd get a return on that as a custodian of the society, that's where the real value of what we do comes in. And I know I went back to it before about the systems, but you can't have that conversation with ones and zeros.
No.
It's just, does it fit or not?
No, agree. Kyle, we'll jump into you for the niches, because I think that makes it, if we understand our Baz, we can break some more myths with these niches that you have as a society. It will make it even clearer about what we're trying to bust here. And one thing is that some people, and you'll probably hopefully agree here, a customer may think they've got a pillar that's a bit wobbly, and that might be a daily rate contractor.
Yeah.
But actually, that's one of your strong points, one of your niches. So you would see that as 5 strong pillars, whereas they would see that as, I'm going to struggle to get a mortgage here. I love speaking to someone who's on a daily rate.
So why is that? Why is that an issue?
So it's a different type of self-employed, and it's a podcast on its own. And we won't try to get into too much of the granular detail. But what that would mean for a self-employed person, especially someone who's maybe only been there for 1-2 years, they would probably think that they have to keep grafting away for 3 years to be able to get accounts and pay their taxes, when actually a daily rate contract is just as strong. And normally they are in roles where there's quite a bit of demand, so oil rig workers and things like that. And that would be a fifth pillar you'd see as a strength, but many banks wouldn't even entertain that, and the customer would have to wait. And we always go back to with BAS, we're trying to stop people walking into their own bank, getting rejected for a mortgage, and giving up on that dream. Because, like you said, 90 plus banks and building sites to go at. Speak to us and let us tell you that you can't get a mortgage yet. We can always get you a mortgage. It's just when, and that's what we keep going back to.
So just before we go any further, I know we've talked about niches, and you were saying that if Paddy's got like a not a problem case, how did you say, like a bespoke kind of case?
Quirky.
I take it you do lots and lots of business of just normal, easy, bog standard mortgages.
Yeah.
Or is it more, or is your main sort of USP that it is niches?
So the main USP is the quirky. Right. The main USP is the underserved, and that's very building society. If you think what a building society really stands for, it's definitely supporting people with their financial well-being where others might not. We do a lot of, I said before, vanilla. We do our fair share of vanilla, but that's not our strength. That is definitely our strength. Is somebody, it's quite an emotive kind of way of putting it, but somebody who's gone in, like Paddy said, they've gone to the estate agent, they've found their dream home, and somebody said, no, you can't have that. You can't borrow it. There's something wrong with you. There's something wrong with your scenario. We're there to put the keys in those people's hands.
Right.
Not the people, and we'll happily take them, who can be supported by all 90 of those lenders that Kyle referenced. We want to be there for the ones who are brilliant kind of people and brilliant scenarios. They just need that human approach. They just need that bespoke.
It goes back to the community spirit of it all, doesn't it? Really?
Yeah.
Like
How do you think they measure that, Baz? I'm not trying to put you on the spot.
What do you mean? How
your
do you
question is,
measure
why doesn't everyone just go to Darlington Building Society for the vanilla stuff? How do you think they would measure that and make sure that they are looking for the quirkier stuff?
How would Darlington measure it?
Yeah, so let's put on a bank of Baz. You don't want every customer to come through the door. You want to be a specialist in what you do.
So you'll have. Would it be rates? Would it be?
Yeah, he's getting good, isn't he?
Yeah,
Getting good. So would you say that would it be fair to say that your rates won't be competing with the likes of Halifax?
No, not always. So you touched on a little bit earlier on about the difference between bank and the building site and how they're funded, and we're going down a different track with this. So I'll go very quick. But we've effectively got to pay our service. So our business model is unbelievably simplistic. Our treasury guys will tell you different, but it is unbelievably simplistic. You save money with us. We invest that money in Paddy's mortgage. Paddy pays his bills. We then give you back the rate of return on your savings, and it's just cyclical.
Yeah.
And it's really ethical, and it's not putting an extra yard on the end of a shareholder's yacht or investing in oil companies or anything else like that. It is literally just mortgage into savings. We keep a profit to keep us sustainable. It's not for shareholders or anything else like that, and it goes around that way. So our rates need to be slightly higher because we've got to attract the retail savings to fund the mortgages. So there's that element in there. So we could go really, really cheap, and we could compete with, we'll pick on Halifax and try and take some of their business. But their model's designed for that ones and zeros that you can throw 1,000 things down it, and 900 will just slide through without touching it. The other 100, I'm putting words in their mouth, but they'll just happily accept they'll lose 100 because there's another 900 coming down the chute. We can't do that because of our size and our scale. So we've got to make sure that what we go after, we're more choosy. If we got 1,000, we can support as many of those 1,000 as we can. Hence why we kind of look at the niches. But we meet regularly. I mean, Carl's been with us 2 months. I think Carl knows to the hours how long he's been with us. It's the best job he's ever had. But we talk all the time about what you're saying no to. Not what you're saying yes to, because I know that. What you're saying no to. What you're saying no to where you're annoyed, where you're disappointed, where you've spoke to somebody like Paddy or an advisor somewhere else, and you're going back to that Dragon's Den, I'd give him my money. But I'm not allowed because we haven't got the risk appetite for it. And no one's ever asked the question, have we got an appetite for it? And we've met twice in the last 2 months as like a risk management team. And we've sat down with proposals and said, if we had this scenario, how would we fail?
I was going to lead me on to that. Like, what you're constantly trying to evolve, I take it, as new issues come up, world's changing.
Yeah, massively.
So I take it, that then gets fed back to you.
Yeah.
To then bring up the powers that be.
Yeah.
And
I mean, you've got to
change things to.
You've got to be very. You can't be all things to all people.
No.
So you've got to be very, very careful to choose where you want to take the risk.
But that's why you're special for a lot of people, because you will take that risk on them. And you, like Paddy said, that maybe you're not for everyone that way, because why would you? You know, speaking from my own personal point of view, if I went to Paddy and he said, yeah, you've got this here, it's a bog standard mortgage, you've got this rate here, or you've got this rate here, this one's higher, I'm not going to go for it, am I?
No.
But if I went to him with a case, I'm like, oh, I don't even know if I'm going to get a mortgage, I really, really want this. And he said to me, they won't take you, these lot will, and they'll do everything the right way, and they're going to really look after you, but it's slightly more. You would do it, of course you would.
Yeah,
and I think it's good to have that option, isn't
we're in a really kind of interesting rate environment at the moment that even the best rate isn't the best rate. And certainly compared to the super cheap money people were used to over the last 5 to almost 15 years now, we're certainly not in that world. But what that's done is some really interesting like rate compression. So whereas we might have been 0.5% or even 1% away from a best buy, which would have just absorbed every vanilla case going because it was so good.
Yeah.
We're now 0.1% away from a best buy, because if we were that far away, it becomes unpalatable to the end kind of consumer to go, I'll just wait. You know, that's silly. You know, it was out at the early part of the week. The average 2-year fixed at 95% is over 6%. If you went back pre-pandemic, that would have been Paddy saying, I've got an ex-bankrupt who's only just come out of it, 6%, and they've gone, well, I better take it or leave it. And now you're telling the first-time buyer it's 6%. That's just the environment that we're in.
Yeah.
But that rate compression means that actually the best to the worst, for want of a better phrase, is really, really narrow. And if that's the difference now between keys in your hand or not, it's worth the extra 1 pence in the pound. It's a non-argument now, which is brilliant for the consumer, even though it's tough out there at the moment for them.
How does that affect you as a business when, because the gap, like you say, was quite high, so you'd be obviously getting less of the pot that were there.
Yeah.
Now it's quite tight. Are you suddenly seeing a lot more business come in that you're thinking you're having to spend less time on it?
Are you getting more vanilla stuff?
Yeah,
so
we are, which is interesting, because not that we don't want it, but that's just not our model. We're naturally not built to take that. We're there for the niches, like I said before, because we know those vanilla types are kind of elsewhere, and we're more than comfortable helping them. What is really interesting is it's the pressure between what you've got to pay your savers to retain their deposits and what a mortgage customer member is willing to pay. And that's where the real challenge is. So, you know, this isn't the myth we're talking about at all, I appreciate it. But at the moment, people look at 6%, 5%, 4% and go, banks and building societies are taking the mick. They're raking it in, you know, and that's not fair. The reality is every pound has to work harder in this environment because savers are demanding more because base rate's so high. You know, why would I not? Base rate's 5.25. Why aren't I getting 5.25 on my savings? If you can put money with the Bank of England and get 5.25. And that's really difficult then when you're trying to price competitively your mortgage and you're going sub 5, but you're wanting above 5 for your save, and it's like cost of funding is just ridiculous.
You can't win unless you're sat on both sides of the fence, or both sides of the fence. You've got a lot of savings, but you still need a mortgage. You'd appreciate it, wouldn't you?
Yeah.
You only look at your own situation is the thing, don't you? As a customer, you look at it and you think, at this minute, I'm only concerned about my mortgage rate.
But other than that human touch, what's the Darlingtons? What niches? Not your brand new ones that you haven't released yet. What would you say that you bring to the table that maybe Baz would raise an eyebrow when he's talking about his banker Baz? What would you say that brings people to the Darlington?
I mean, probably one of the ones that's the most talked about at the moment is probably the skilled worker stuff, isn't it? I mean, so skilled worker visa, people coming over that are doing jobs that we absolutely need in the UK. And you'll know, Paddy, that there's a lot of problems for them getting mortgages, certainly in the first 2-3 years that they'll come over to the UK, because most banks won't even entertain a conversation at that point. So we spotted a niche sort of start of the year that, these are great clients. They're in fantastic roles, making good money. They're always going to be demand for them to be here. So, again, helping the sort of underserved on that side.
So I take it that it's the lack of history in the UK.
So I think it's kind of twofold, isn't it? It's lack of history in the UK, but also the fact that there's a little bit of uncertainty that visa does have an expiry date. So in theory, you're here for 5 years, and then what happens after that could be up for debate. But we know that as long as they want to be here, there's a home really for them here.
I mean, you're buying a house, so that itself is intention to stay, isn't it?
Yeah, but I just think lenders don't, for whatever reason, don't feel comfortable with it. So again, it's that kind of underserved element. Well,
So when did you jump into that market?
Chris,
So we've always been there at a lower LTV. So we used to be there at 8% LTV for your skilled workers, and we've been there. I think I've been in the society now 8 years, and we've always been there for that. But it was the 90% LTV, and these people have chose to come to the UK. They're supporting our NHS. They're supporting areas where we're not training them quickly enough. We're not bringing them through. They want to make a home here, and they're actively making it a better place, as long as they're willing to rent or in a HMO and can't put down roots for their families. And you sat there going, that's just stupid.
It's counterproductive,
No-brainer.
isn't it? Because obviously people aren't going to stay if they can't get a home,
Yeah,
get
exactly
settled,
that.
they're not
And
gonna
it's
stay.
just a perpetual circle of, you know, let's not kick the NHS. They do that.
No.
But you got the NHS and there's waiting lists, and then you're telling the doctors that they can't put down roots in the UK. Well, guess what they're going to do? Not come to the UK to support the waiting lists. So we're sat there going, well, that's just silly. You know, from a risk perspective, Carl said, good earners, good careers. Quite often in couples where they're both skilled workers, you know, you tend to get two doctors and things like that.
It's a massive life move, isn't it?
Yeah.
Coming over
Yeah.
somewhere. So
Yeah.
I take it, but with that as well, you're treating people in those circumstances exactly the same way as you would with a normal case that Paddy sends to you. A bit of, you know, like you say, a niche case. But you were saying that you're in the 90s, or you aiming to get into the 90s LTV for?
Yeah. So at 90% loan to value now, because it just felt unfair to say, we'll support you once you've saved a 20% deposit. What's the risk at 20 that isn't
I
at
like
10?
that, yeah.
You know,
What's the difference?
the person's the same.
Yeah.
And are you comfortable that they're going to pay their mortgage, stick around in the UK, yes and yes?
Yeah. Because if you're not, you wouldn't get one either way.
You wouldn't get one. You wouldn't get one with 20. You wouldn't get one with a 50% deposit because you'd still go, I don't think you're going to pay it.
It's a good way of looking at it. And you've got so not to name drop, but Barclays, they've changed their LTV levels and their time served in the UK only just recently.
Yeah.
So that's one of the biggest banks, mortgage lenders, kind of adapting your role. So just to flip that and not say that they're stealing your stuff, when you have your committee meetings, do you look at what's changed around you that lenders have started doing that you say, should we do this as well? Is that how it works?
Yeah, so you look at kind of in your peer group. So you'd look at similar sized building societies because they'll be set up similar, you would assume. So if they can handle something by default, we probably can. Although the fact that we use Iris as MSO platform means that really we should be looking at the big building societies now, because if they can handle it, we can definitely handle it.
Yeah.
And it's interesting, some of our peers are looking at what we can do and going, well, if Darlington can handle it, we definitely can't. Because actually we're now not geared up to do what they do because they're systems, which is a niche within itself. But it's that competitive edge of, I think going back to your point before, Baz, do we go down the rate curve and just go cheaper and cheaper and cheaper and put the stress on that savings rate funding? Or do we ensure that we're just one step ahead of that niche? And that can't go on forever because you get back to your 2008 to 2009s of silly kind of mortgages.
But you've got to be sustainable, haven't you, at the end of the day? You've got to look after both sides.
But that's the point of a building society, in the sense that all we're lending out is our members' money. I'm saying
So
all.
where does the money come from? This guy, it does make me, I feel thick. But Paddy said just to ask any question, there's no stupid question. Where does the money come from in a bank then compared to the way you've...
So a bank can use retail deposits, so they can use savers. But you've also got to remember, a bank will have credit card income, it'll have loan income. They can also get money much easier on the money markets because of their
So
size.
it's- yeah,
so they can
it's
buy
more-
they can buy money in. So you could have, hypothetically, Bank A sat there not doing much mortgage lending and going, we've got to get rid of some of this money off our book because having money on your book costs. So they'll sell it to Bank B at 2%, meaning Bank B can sell it at 3% and make a little bit of margin. We're not geared up for that. We can do a little bit, but we really don't want to because that's not what we're about. We want to goes back to
away
that
from
cyclical.
it.
Yeah, it comes back from the purpose. Yeah. But they do have that opportunity. The other side of it is you've got banks that are international. So if you've got HSBC who are global, their pool of funding is completely different to Darlington, and we don't just have savers in Darlington, but we're more locally driven savers than internationally driven savers.
So where would you put yourselves on a scale of sort of size? How many employees, how big?
So just under 200.
All right.
Yeah, just under 200. So not huge, not small.
Not
you know,
small, yeah.
nice
You
and
just, I don't know, as a layman, you just think building society, like you think of it as a little, not
Yeah.
corner shop, but you know what I mean, like a small little business in a little town, nice and quaint. Whereas that's massive, isn't it? Really?
Yeah. I mean, in terms of kind of like local employer and local footprint, we do an awful lot in and around kind of the Tees Valley area, community impact type stuff, outreach and stuff like that. So there's a real purpose to what we do, which is nice. I said it before, I think about that kind of ethical side. It's really interesting. You've got the Co-op out there at the moment who are rightly so saying we're a really ethical lender. And you sat there going, every building society does it without telling you, because it's just ingrained in what they do. You know, what we do here is just naturally ethical. We don't have to sit around a table and come up with a slogan of how that's going to kind of be bled out to the public.
Given, isn't it, I suppose, with it?
Yeah, kind of by default, which is
And
nice.
have you got a loyal local customer base as well, like we have here with the Cumberland?
Yeah. I mean, we had our AGM early part of this week, and it sold out, which is brilliant because, going back to your point there, Baz, just little old building society, you were going to talk about, we've made a little bit of a profit because we kind of talk about profit is you optimise it, not maximise it. You need enough to kind of cover the bases and you need enough to invest in tech. But if you're making too much, you've done something wrong, because who are you not giving it to as a building society if you're making too much profit?
Yeah.
Whereas it goes back to the banks before, make more profit, make more. Take it off them, make more.
It's kind of it's a tough margin to get right, isn't it? Because as you say, you're trying to please lots of people, and you want to look like you're doing what you've said you're going to do.
Yeah.
So it's quite a lot on the balance.
But I think I do think people really appreciate. You know, I'm a huge advocate of the building society, the mutual sector, and I think towns and regions that have strong building societies are better for having that presence. Because there is that support, there is that open door. Come and talk to us about your finance. I'm getting away just from mortgages, but come and talk about your financial well-being. You know, have a sit down and talk about what your goals are. Talk about, you know, I've got children and I want to kind of, how do I help them get on the housing ladder?
The world's changed in the opposite way, hasn't it? Where everything's like, you say, automated. Whereas it's nice to have that.
Yeah, I think
that there's nothing better than getting a problem fixed straight away, but being able to get across the emotive side. And you know, and feel like you're getting a bit back as well.
There's certain things in my mind that automation and systems are brilliant for. Yeah. And there's certain things that I need to see the whites of somebody's eyes before I make a decision. And when you look at, you know, mortgages, when you look at big savings, you know, future stuff, that needs a bit of hand holding. It does, and I'm fortunate in my role that I look after my direct advisors and I look after all the intermediary stuff. And genuinely, I don't care which channel it comes in through. As long as somebody doesn't make an ill-informed decision, sat by themselves after viewing a TikTok and going, brilliant, I now know how to do something. Yeah.
And what's your role? What's the actual name of your role?
So I am head of mortgage distribution.
So you are head in a similar sort of fashion to the way you are head of mortgage advisors, in effect. Is that right? And you're saying there that there's
it kind of. So
advisors under you.
So I've got 5 mortgage advisors who I look after as well. So they're kind of, I have the whole regulated side, and I've got to make sure that their advice is correct and everything else like that. And that's for somebody who would walk in through our doors and kind of say, look, I've looked online and I think you can help me. That tends to be more of the vanilla stuff that we're talking about before, because if you are knowingly the complicated, you seek out a mortgage broker, because that's the absolute right thing to do. You knock on Paddy's door and go, I think I need some help with this, because I think my scenario is a day rate contractor or low credit score, younger person after a high LTV, any of the niches, they tend to find their way to a good broker. Right. Okay. Which is the right thing to do for their advice.
And then how's your working relationship with Kyle? Like, is it a two-way street in effect? I know he'll pass things back to you and say this is how we think we could improve things. How do you then?
So the way I kind of view the business development team is they're my eyes and ears. So Kyle will, I'm speaking for Kyle here, but Kyle will see 30 mortgage brokers a month as a minimum, face-to-face or virtually, depending on the sell. He'll take 10 to 15 phone calls a day. He'll get 50, 60 emails potentially a day of, hi Kyle, I think you've got an appetite for da-da-da-da. And I need all that information. I need it filtering. I don't just want Kyle forwarding it on and going, have I read of this, Chris? Yeah. I need to know, are we not doing something that we should? And I work really close with our head of lending who supports the underwriting team and our risk teams and go, look, how do we feel about this? There's elements here where it strikes that balance between what we need to pay our savers and what we want. You know, there's a good margin opportunity here because there's always a commercial element. But actually, it's not a risk. Those pillars are safe if we kind of look at it that way.
That way of looking at it is fresh. It's what what are we not lending on? I like that.
Yeah.
And you cannot get that in a bank because it's impossible for them with all the zeros and ones to look at them 100 cases and say, what did we miss out on there? Because that first hurdle is a yes or no. Computer says no. But with yourselves, you know every no.
Yeah.
Does that
It's
make
almost
sense?
like self-auditing, isn't it, really? It's you kind of...
I mean, you'll get some crazy ones.
I mean, you get somewhere you just go, that's just a no, and that's the end of the conversation. That's
But
yeah.
is that, I take it, in that situation, you kind of think it's a no from you, it's a no from pretty much everyone.
I mean, not necessarily, because I mean, we can't be in every niche because we just couldn't cope with it. But so there are some things where you go, well, we don't do it, but I might know that another lender does it, and
But it's your job to make sure that I don't ask. I will still.
but it's
ask
an
any
education
questions.
piece to say,
Absolutely.
Paddy,
It's good for me because when we first started doing these podcasts and when I first started working for you, you always said that. You were like, oh, there's some lenders that if you've got blue eyes, they'd be the person I would send you to.
Yeah.
You need to know who the right lender to send to, and I suppose a lot of that as well, from your point of view, is to get your message out and to have sort of not strict guidelines about the kind of work that you want to come in, but trying to tag yourself.
But these guys,
you know what I mean?
No,
It's
no,
like,
no,
so you've got to have your.
It used to be the business development manager used to meet you, and they'd pull out the pamphlet and say, this is our in a recap of it. Text changed, and we've got the likes of Knowledge Bank, which is fantastic. Zoom helps because 15 minutes once a week, once every 2 weeks is good. The meeting that we had in North Lakes with yourself, that was phenomenal.
Yeah.
Everyone in our office had COVID. I'd just recovered and I turned up. And it was fantastic because I remember how it used to be. We can't be doing that all the time. But that was more informative for me of recapping on my knowledge, my CPD. And it's your job to make sure that I don't ask you something as simple as, do you do this when you go, no? Of course we don't. Because I should have a knowledge through you and the technology I've got. I think this one's for Darlington. And that's where it's key. We're lucky because we've got volume of customers. And with the military, and this isn't, I'm allowed to, not to slag off the military, but I'm allowed to be broad with it. But we get a massive range of criteria questions and different scenarios because the military are like that. That's how they're built, they're designed. So I get a lot of scenarios that I then get to dig in deep and do my research. So for the volume of customers that we get as a smaller firm, we have a reach of all of you guys to be able to say, right, it's not for you. We have a criteria sheet and we'll whittle it down to somebody, but it might not be now. And you're very good at this. So the Kensingtons, it's, yes, we can do this in September. And that's okay. If someone's buying a house, the first house, September's not a long time to wait. Or this time next year is not a long time. Keep knuckling down, keep saving. That's better than saying, can't help you because the high street don't want to.
Yeah.
It's keeping that communication going, isn't it, really, I suppose?
yeah, I think it's
between
better
all
what
of you.
Chris said earlier as well. It's like, well, it doesn't fit in its current guise, but if we do this, maybe a little bit more deposit, maybe, you know, like you say, a few months down the line when that credit file changes slightly. So it's that education piece of, well, it's not now, but when. Again, sometimes it will be a no, and it's just a no. And like you say, Paddy, it's kind of that. My job is to educate in terms of what do we want, but also what don't we want. Because like you say, I don't want to be but saying no to you 5 times a week, because hopefully you'll know that actually that's not what Darlington want. Therefore, I don't go there for that type of client. And then if that changes down the line, then that's when I come back and sort of say, you know.
So, with that in mind, then, where do you see Darlington? Where do you think there's sort of a route for progression? Where is there anything that you think you'd like to?
I think your system is already there, isn't it? That's the progression.
So the system's there, and that's been the big thing. So I think I can.
How long have you had that?
So it's been in for 3 years. We've been fully on MSO because it couldn't do everything that we wanted it to do. So we had to do some dual running, which caused a little bit of pain internally. You wouldn't have known it externally, but it was painful internally. And we've been single system now for probably 8 or 9 months, and we're starting to leverage that. So strategically, that was the huge thing. That was a big change to get a system that the high street has, but configure it for the things that we want to do. So I know I said at the start, but get it to look at the things that we don't think add value and use that really sharp, precise tool of underwriting on the elements that do need looking at. We've recently gone live with something called Lender Connect, which plugs into a CRM system. So if you've got all the client details in your CRM, one of the most painful things is copying and pasting that into the originations dip software. So where you get your decision principle, Lender Connect just drags it all over for you. So if you've got a CRM system which has got the API to Lender Connect, which Quilter might have, I think, in terms of X-Plan or Trigold.
Yeah, Iris.
Yeah, Iris. So you can hit the little connect button if you source with Darlington, and it will literally just pre-populate all the information out of your CRM system into ours.
We're nervous.
So
to
it's all
use
of these
it.
efficiencies.
Yeah, but that tech's only new and that tech's developing. And again, it goes back to that myth about being different. We're leading the charge now. We're the only building site to use it.
Yeah.
But we're happy to lead the charge now because...
Do you know why I'm not keen on using it, or wasn't, until you just said what you've said? So the TSBs nationwide, they're on it.
Yeah.
And doing a decision in principle and getting a decline and then having to try another one is time consuming. But the fact that you can Lender Connect and switch, then try TSB, that didn't help us because it was, if it's not passive nationwide, there's something there.
Yeah, it's not going to pass with the
But
other
if
2 or
you're
3.
there,
Yeah, exactly that.
That's why we need everybody on it.
Yeah.
That's what we do.
So we're starting to see huge efficiencies from that, and we're starting to see certain brokerages who are built for volume, who don't particularly like, because of their model, I've got to be really careful so I don't give away what I'm talking about here, but because of their model, they don't like the quirks because they're a volume driver.
So they want the easy.
Or they want as many as they can get through that machine as quickly as they can. And the stuff that we get takes a little bit longer because you've got to talk to the client a little bit more. But we're now starting to see huge increase in volumes from them because of Lender Connect and because of Iris MSO, because they're going, well, it's actually not any more difficult to deal with them than it is to deal with Accord. So Accord, which is Yorkshire Building Society, are probably the gold standard of what people aspire to be in terms of a building society. Nationwide's a bank. For want of a better phrase, they operate like a bank, but they've got a good kind of social conscience. But Accord is a building site, YBS, and our systems are exactly the same as them. So when we talk to people and go, all of this stuff, Carl goes out in his meeting and goes, all these quirky things that you've wrote down 50 things there. You went, oh my god, I can't believe I can now place that case. Yeah. It feels like dealing with Accord.
Okay.
And the brokers go, you've just blown my mind for that exact reason. That the tech works for these guys, but if it fails with these guys, it gets complicated, doesn't it? It gets awkward.
It's interesting because even me, I see Accord as another bank high street because they are that competitive, but yet I can speak to the underwriter.
Yeah.
And that myself tells me it's a building site.
Yeah.
But that's great. We did a case with you, and I want to say Sarah.
It would have been Sarah.
Sarah.
Yeah.
So I did a case, and what it was, failing affordability. That's a computer says no. You don't need a human to tell you that didn't fit. Yeah. And how this was a no. So normally it would be big no, doesn't work. But she came back to us, she picked up the phone, and she said, I noticed you keep childcare. Does the customer have savings? And I'm talking like substantial. Yeah, it's got about 20 grand rainy day funds. But the childcare is only running for another, 13 months. If there's enough to pay that bill as a one-er, we can disregard that childcare and it meets affordability. And I'd already gone to source elsewhere, which isn't easy. And it was pulling it back. And that was just something where I thought, well, that is my job to do. I can't tell someone to pay a childcare in a lump sum. But that was them trying to look at a solution for a problem. And they did that, and you did that in the background. And that's just makes sense with what you said. And that's the biggest takeaway from this.
Nothing's changed with her affordability, really, has it?
She could afford the childcare, but what we were doing was taking it out of her income and expenditure. Yeah. Whereas actually the savings was enough to cover the childcare.
Yeah, I mean, you had
phenomenal.
Tom, didn't you, a little while ago from Bill Loan,
yes.
and they have a very similar issue. That the fact that normally they've got a mortgage in the background, and some lenders go, you've got a mortgage in the background, it's £1,000 a month. Therefore, for your affordability, we need to take £1,000. Some of them, which blows my mind, then stress it at a higher rate and goes, well, it might go up, so we need to actually. Instead of you pay a rate of 2%, we'll stress it at 9% just in case, and then you go, so it's now £2,000. So that kicks out on affordability. Where we would just turn around exactly that and go, have they got provisions? Yeah, they've got 24 months worth of savings, in the background because they've been building this kind of fund to build their own home. But actually, you can lend them more than they thought, so they don't need that slush. Well, then we'll discount the mortgage in the background because you're not going to not pay it, and they've got the savings to do it. But again, it goes back to what's before. Ones and zeros will just go unaffordable. Move on, because I've got another 999 coming, so why waste any time on that?
Yeah,
it's finding the balance, like you said, about these efficiencies and making your jobs easier in effect, but then being able to give the personal touch to it.
I know I said at the start, it is putting the underwriter where they need to be. If you want manual underwriting, it's not a all or nothing.
No.
You know, you don't have to underwrite everything. You don't have to underwrite nothing. You need to underwrite the bits that require the skills, and some bits don't. No offense to the underwriters, but it's a waste of their time. They are much better than trawling through basic information that'll tell them nothing really, other than it'll tick a box that goes, I've checked.
And it just makes sense with what you said, that you're looking at what you said no to. So in the background, you're not just saying it, you are actually doing it, and that's what Sarah did. This is the bit where we throw, in the last kind of 15 minutes, we throw it back to Baz. He'll have made notes and he's got questions, not want to interrupt. But we've made a new feature where we're allowing the guests to let Baz steal some of your criteria for his bank. He does need funding as well, by the way, if there's any spare at Darlington.
We'll have a whip round for you, Baz. See what we can do.
Good to me.
So Baz, over to you.
So you wanted me to say what I've liked the sound of.
So what are you going to steal from the Darlington? We haven't got time, and we will get you guys back in for a podcast when we're in the podcast room, and you just turn up and have your brew.
Is that the beers one?
That's the beers one.
We'll do that one.
I just hope that this is that someone can actually listen to this, because I'm worried about this technology. But that's been on my mind. But yeah, so
what would you steal from the Darlington in terms of their criteria that they've talked about today?
I really like the pillars analogy, and then not just having it as an analogy and as like, you know, a bit of a mantra, acting upon it. I think that's really good. I think it's obviously helping you to deliver, but from a customer point of view, I think that's really good.
Giving them a chance.
And the main thing that I like, I think that everything's kind of commercially driven nowadays, and I like the personal touch, obviously, but I like the whole thing of sustainability and giving a bit back. Not just caring about profit and, like you say, putting money in people's pockets, but also helping out the people who've shown a bit of faith by investing in their money in yourselves. I think it's great. It's great that hasn't hindered you, in effect, and held you back. In effect, it's allowing you to now do something which is going to help, say, me down the line when I've got a case that Paddy can't just palm off to anyone. And I think it's having that kind of more diverse outlook. And I think that's really good. And I think Banker Baz has maybe been a bit too strict. I think we'll now take older people, just because I think it's just made me.
But my job would be non-existent if everything was vanilla. Also, if the banks only accepted vanilla, I probably wouldn't have a job.
Not much. I don't. Maybe I'm a big worrier, but I don't think anything in my life is vanilla.
There's not much vanilla anymore. It's really interesting over the last probably 2 to 3 post-pandemic certainly that. Even if a building site had stood still in terms of its criteria and its appetite, the market's moved towards it because most people, a lot of people's scenarios are different than what they would have been. There's minor credit blips because people were furloughed. There's people who started up businesses because they were, locked down and were furloughed and didn't know what to do.
And then you throw in like the credit crunch and all.
And then all the cost of living affordability issues you've got now. You've got people who, had businesses, brilliant businesses, had to stop trading for pretty much a year. You have a system, it goes back to what I was saying, you have a system that looks at those accounts and it'll go, made a loss, not interested. Of course I made a loss, it was COVID, I had to shut down. That's a nice story, I don't know how to handle it. Decline. Or you come to a lender like us who will just go, well, can we have a look at the accounts before? Yeah, you were a really good business before lockdown, you're a really good business after lockdown.
It's sad, really.
Something must have happened in the middle.
It's sad that does count against you, but it's refreshing to know that you're willing to look at it. I know, as you were saying, Carl, you can't say yes 100% of the time, but at least you're given another kind of lifeline, really, because it's a big, one of the biggest things you ever do, isn't it?
Huge.
That leads me on to just a question. Just when you went back to saying that you don't do any repossessions, how do you kind of mitigate the risk a bit?
So it's a cultural thing around repossession. So. There's a fear from the consumer that if they talk to their lender about financial difficulty, they're in trouble. The advice is the second you have a problem, talk to your mortgage broker, talk to your financial advisor, talk to your lender, and then we can work with. So the government made some interesting changes last year, but what that allowed is people to go into short-term interest only. So I have a cash flow problem. Can I go on interest only? I appreciate I'm not paying off the capital, so my mortgage balance stays the same, but actually it reduces my payments while I get things sorted. That's really helps. That's kind of what you call like a forbearance measure. So that's working with. But if we've got anybody who is working with us, we will not possess their property. It's the home. We're talking about bricks and mortar in terms of the kind of what's on the book, but it's somebody's home. What you tend to find is that you've just got to support people who understand that you've overstretched. Your scenario is no longer there.
Find a way out of it rather than just doing even more the whole.
And it goes back to that. You can't be all things to all people, and Kyle has to sometimes say no. If I said yes to a case of Paddy's today and forced it through, which wouldn't happen because of how it works, but let's say we did. Let's say I had one golden ticket a month of any case I wanted, and then next month we take the keys back off them. That's the worst thing we could have done. You're better off going not now. And it's that underwriting stance of let's make sure it's the right thing. It's got to be responsible lending, and it's got to be responsible for the applicant as well as it has to be for us as a lender. And our forbearance team are brilliant in terms of the work they support. But again, it goes back to what I said before. If anybody listening or anybody ever kind of crosses the door and goes, I've got a mortgage and I'm worried, talk to your lender in the first instance. Doesn't put a black mark against your credit report. If anything, it does the opposite in terms of that lender then working towards to keeping you in.
I do think, from my point of view, I would think straight away, if you kind of disclose this that you're struggling, it looks bad on you. But as you say, you're not wanting to stop people off.
It's a record.
No, I think
it needs to be encouraged. Martin Lewis is doing a good job of it.
Yeah.
But it needs to be encouraged to be able to talk, because it's a record of you reaching out as well.
But if you start early as well, then you kind of nip it in the bud rather than letting it escalate and get worse.
So it's so easy to escalate.
I like the way you've explained that, because what you're saying is we're going to take risks as a whole, but we need to be responsible for that, because the richest person in the world who may have been vanilla can lose the job or get ill.
Yeah, ill. Yeah.
And if they're the one, and you're knocking the door to get the keys, then that goes against the ethical standpoint. I mean, don't get us wrong. There will be reasons why it needs to be, I'm sure. And that's from any bank or building societies. We make that very clear. But if you're going to make one mistake, but you can't predict it, which your responsible lending will always resolve because we can't see into the future, then that's a great way to look at it. And I think that needs to be the headline, not mortgage rates are going up. Do you know what I mean? Even you just saying that gives me as a broker, I feel better about it, because it's all great when you get a mortgage and you're buying that first home. But what happens if X, Y, and Z comes into play? And that's something that Bank of Baz should definitely. I said this to you last week.
After this today,
I said you wouldn't repossess you.
I think you need to be the building society, but I don't know. Why do you want to be a bank?
I think it's going to be building society.
It's going to be called Bank of Baz, the Building Society.
No, I think building BSB. Building society, but I think it's opened my eyes a lot, because it's not something that I've ever been interested in, and it's not anything that I would have ever delved into. I can't even. I've said this last time. I can't even remember when growing up in Sunderland there really being a building society. There was, what did you say the name of it? What's the main one? The big one that you said was a bank, basically. Nationwide. Again, obviously it's Nationwide Building Society, but it was always market. When you're talking about it, it's just nationwide. So I think when I moved over here, and then obviously you've got Cumberland and things, and I think Penrith Building Society, and I think it's almost like something that seemed bigger over here for some reason, or in smaller sort of places. But I mean, there's nothing stopping me coming to you and investing my money and saving and stuff there.
And the best thing about this myth, and I think by having two building societies on back to back, it'd be interesting to meet the banks and watch Baz grill them and say how horrible they are. But actually, it's to us, it's about the business development managers, and that's who we're dealing with and who we're working with. And we're very lucky in the Northwest to have a good support team, and they will deal with our one client in their millions of applications per year. And it's
the only way it's going to work, though, isn't it?
But I think that's what all they're doing. A bank must have a meeting and say, let's be more like a building society for our customers from the mortgage point of view, because otherwise we're not meeting consumer duty, but also we're not being ethical. And if a bank says they're not ethical, then that's the proof's in their pudding by the way they deal with it. Credit score has to take place for the volume, I get that.
Yeah.
I get that. But in terms of that myth, just to round it all up, dealing with a building society is hard work. How do you feel, Baz?
I think the hard work is done by yourselves, and I think for me, if you've got any kind of sort of special needs or sort of special actions that you need, and I think it's great to have that option there. It's great for you, Paddy, as being able to.
But there's brokers out there.
No, and you've got obviously a very good relationship that way.
Sorry, quick off. There's brokers there that won't use Darlington Building Society because they'll have popped up in their criteria search. They don't know them until they ring you guys and get to know you. Then they'll do that one case and it'll just snowball like it has with us.
So that's Kyle's job.
Yeah, so speak to me. I'm the man.
Yeah, it's just without a building society and all these the human touch, you're kind of not serving all your clients. I don't think there's many mortgage brokers left in the industry where they would just look at the top three and if it doesn't fit with Halifax, then off they go. We can't help you. I think getting into the nitty gritty with the likes of the building societies that pop up and you think, oh, I never used them before. That's a great excuse to use them.
Yeah.
Put that case to them because for one, it's an introduction to yourself. You're going to want my business and you're going to think, well, actually, if I get this case, then he's going to get another one like it. And it's not just that you're local. There's building societies that we've used, like I say, at Mansfield, Chorley. To me, it's just what they do. Cambridge are jumping all over things. And I think it's just a new way of lending, whilst also knowing that it has real repercussions to the money that's going out because it's not your shareholders, it belongs to your people.
Yeah.
I think that's the key. So the brokers need to take more away from this than the myth for the general public. You're not hard to deal with at all. Not in the slightest. I'd say easier. And
I imagine Paddy's harder to deal with.
Oh,
than
100%.
you are.
That's just his accent, though. That's the.
But like, I mean, it's not even an effort. I send something with you. We don't even put the pleasantries in. It's a case of, is this one for you?
Yeah.
And you'll come back and pick up the phone and then we'll talk in depth. And that to me is just doing my job right. But without the building societies, my job wouldn't really exist because I'd be saying no, and you'd not get that feedback because I wouldn't even be coming to you. So
I think personally, it's been really informative. I've really enjoyed that.
yeah,
Technical issues aside, I think it's been really good. And
fingers crossed people can listen to this.
I know, here's hoping. But it's opened up avenues for it to get you on again because there's loads of questions.
Oh,
that I could have
100%. We'll do a podcast about many of the different things. But guys, really appreciate you
Yeah, it's
coming
been a
across.
pleasure.
Thanks for your
Very
time.
much for coming.
That was episode
Yeah, really
21, and that was the myth busted wide open. Dealing with a building society is hard work. Till next week, catch you soon.
See you later.